we're going to start it right here. We're going to start this out right here. This, what we're looking at, is a real DD214. Okay. In this video, I'm going to talk about box 10, which we see right here says SGLI coverage. Then it has an amount written in dollars. In my case, you see 250,000 right here. Excuse me. So I'm going to be referring to an account in this video. We're going to be breaking different things down. But this is what I'm talking to when I'm talking about this claim for this amount evidenced in form DD214. I'm not talking about other values that this form may carry or represent. I'm specifically talking about the redemption of this amount, the amount that's written in dollars, that's easily that you can easily determine the value. That's what I've done research in, how to redeem this specific account. So I just want to be clear with that. That's box number 10. And I just want to show you a real one so that you could see that there's an amount in there. If you're a veteran, pull your DD214, look at your box 10, and see what that amount is. And if you were a veteran from the 70s or 80s, it might not be in box 10. So you may have to search the certificate. That being said, this is thctrust.org, and we're going to jump right into this presentation. So, foremost, what we're looking at, as we just seen, is a Department of Defense form DD214. And to start out, the first thing we want to pay attention to, because what we're trying to do is better understand what is this form that they give to us. It's a certificate, and what is the legal significance of this document. So in order to do that, we start out by looking up words such as certificate, release, discharge, and active duty, because what this form's title is certificate of release or discharge from active duty. That's what the title of the form is. So just to go through some of those words real quick. A certificate is a document for importing and exporting goods. It's a written assurance or official representation that some act has or has not been done, or some event occurred, or some legal formality been complied with. So that's just the definition of a certificate. It's so in some sense, it's a document for importing and exporting goods. So if that's the case, we would say we're importing goods from a jurisdiction with this document, and the goods may be referenced on this certificate if this were being used for importing and exporting goods. But I'm just saying this just gives us we're just trying to get a overall understanding of what we're looking at. But a certificate also says a written assurance, or official representation, like a guarantee, that some act has or has not been done, or some event occurred, or some legal formality been complied with. So so what is the legal formality that has been complied with? Well, it's called a certificate of release. And the release, when you go into the definition of what a release is, it is the removal of a claim, or we could say the removal of a lien. So the removal of any encumbrance or stipulations or controls that were covering these various assets that are being imported on a certificate, perhaps. A certificate of release verifies that some legal formality occurred, and in this case, it's a release of an obligation, a release of a lien. A release also means, where's my definition for release? I had it here on my screen. Well, the release is a removal of a previous claim. And you can look at it like this. Property was leased from your administrative estate, and custodianship was given to, or custodianship was given over to the Department of Defense in some form over your administrative estate when you became a service member and you signed it up. So the way that I see it is property was leased, or you could say a lease is a form of an assignment. Property was assigned or leased or put under their administrative control. And after the fulfillment of the contract, it is released back to you. So now does release take on a bit of a different meaning? It was leased before, and now it's released, which is the removal of a previous claim, the removal of an encumbrance. And so a release is a species of discharge, also indicates that they have relinquished or conceded and giving up a right, claim, or privilege in something, which is to the lessee. So the release indicates that they have relinquished, conceded, and given up a right, claim, or privilege. What could they have given up a right or a claim and a privilege in? Apparently, when we're talking about box 10, it's the amount that's written in there. That's SGLI coverage. What is SGLI coverage? SGLI coverage is obviously some type of insurance policy that was active. You know, when we say an insurance policy, we're simply talking about a contract, a binding, enforceable agreement that's a contract that was good for a certain amount of terms with all types of obligations and things wrapped up in it in multiple parties. Right? That's what it was. But, and what we didn't do yet, and I have to back up and do this right here, is we have to look at the definition of discharge, because this relates to this contract and your active duty service contract, because these are all wrapped up in one. When you become a service member and you sign up, you're signing up for the service, the term, the SGLI, all of this is a part of the agreement, the contract. But I'm pointing this out because we have to understand that this certificate of release or discharge from active duty is a discharge on that same contract that we were talking about that includes the SGLI. So what is a discharge? A release, by the way, is a species of discharge. Discharge means to cancel or unloose the obligation of a contract, right? To make an agreement or contract null and inoperative. As a noun, the word means the act or the instrument by which the binding force of a contract is terminated. So we could also say this certificate of release, which is a species of discharge, is the instrument by which the binding force of the contract is terminated. So this certificate itself is a discharge. And they also tell you, as I said before, a release is a species of discharge. This certificate of release is a discharge, but it calls it that, a certificate of release or discharge from active duty. So the point that I was making is we were talking about what is SGLI coverage, or we should say what was SGLI coverage. It was this policy that had these different terms and the conditions on it, and the coverage was set aside to be used in accordance with that policy while it was active, while the contract was binding and enforceable, right? But now if something were to happen to you, whoever carries the obligation on the SGLI policy has no obligation to do anything or to pay anything because it's not binding or enforceable upon anyone anymore. Because due to the discharge, a discharge again means to cancel or unloose the obligation of a contract, to make an agreement or contract null and inoperative. So I'm saying there's no more terms or conditions or restrictions upon how this coverage can be used because it's not bound to a contract. It's said to cancel or unloose the obligation. And as we said before, a release is a removal of a previous claim. So I'm demonstrating these words to say that the title alone demonstrates to me that there is a transfer of interest in the various items, if not a transfer of some form of title. There's definitely a transfer of interest or Yes, a release of interest. So this is a secured interest within itself, although it's not in the UCC filing system. This is a secured interest, and therefore this might not be the proper term, but I would say an entitlement is therefore created. Because so what's going on is this amount has been released to you as the service member, or let's just say your administrative estate or part of the estate. This amount has been released to you. However, it has not been claimed by you. So what that would mean, if I could demonstrate it with an example, this isn't the best example, but for service members, maybe you'll understand it. Say that you have a weapon in the armory that has been released to you. You don't have the weapon, and now you got to go deploy or something. You may have to go claim the weapon, but because it has been released to you, they're going to give you the weapon when you go make a claim on it. But as long as you don't claim it and it's been released to you, it's going to continue to be released to you. But the property is going to still be in the armory, right? This is the kind of way that I'm looking at this right here. I would further say that what's in box 10 is an obligation of the United States government, and all government obligations. What I mean, let me preface what I'm saying. What I'm saying, if the government pays out its obligations, it's a check that comes from the Treasury, just like your tax return, just like your check when you're in the military service, or if you have a disability claim, veteran, your stuff comes from the Treasury. Social Security, I'm pretty sure it comes from the Treasury. I've never looked at a Social Security check. But what I'm saying is, if this account, and let's look at the definition of account real quick. Pull that up. See if we can pull it up here. UCC 9-102 definitions. Definitions and index of definitions. We're in account, right? Because we're dealing with UCC 9. While we're dealing with this UCC 9, remember I said this was a secured interest, but it's not in the UCC filing system, but we're going to get it in there so that it can be uniform. But an account, except as used in account for, means a right to payment of a monetary obligation, whether or not earned by performance for property that has been or is to be sold, leased, licensed, or assigned, or otherwise disposed of. Let me read that definition again. And that's UCC Article 9, Section 102, subparagraph 2, under the definition of account. This is important because from here forward, I'm going to use the term account, and I'm referring to that definition specifically as relates to the amount written in box 10. I'm saying that's an account in the sense that it is a right to payment of a monetary obligation, right? It's a right to a payment of a monetary obligation. And it's a form of an assignment because it's a release. So there's a leaseor or a releaseor and a releasee. Just like in other transactions, there's a payor, a payee, a bailor, a bailee. So if we're looking at this transaction of a release with the releaseor and a releasee, and in this transaction, we see in box 10, a right to payment of a monetary obligation, who is the recipient of the payment? That'll have to be you. You're the leasee. The EE is usually the recipient. So then who is the obligor or the leaseor, or who would be the obligor on this payment? Well, I would say the United States government, not the Department of Defense or the Department of whoever. They are the ones that's doing this, but it doesn't matter which department or executive agency of the government you work for. The payout comes from the United States Treasury. Obligations of the United States are financial obligations of the United States are obligations of the Treasury. So I say all that to say, from my understanding, this is a government obligation. Why? Because it's an account, which means a right to payment of a monetary obligation. So it's an account, but you haven't made a claim on the account. And to make a claim on the account, you would use something like, you would make a demand or use a demand draft or some type of private negotiable instrument. but we're going to get there. I'm just still going over some basics to get you familiar here. I'm going to take a break. We're going to leave this running. I'm just going to take me a personal break here and put this on pause while I recollect my thoughts. And then we're going to continue from where we left off. But so for right now, we was just breaking down some definitions of certificate, release, discharge, and trying to better understand what has been given to us here on this certificate. I also explained that SGLI coverage, although SGLI coverage is a part of an insurance contract that was binding and enforceable. But now that there has been a release and a discharge, the obligation of the contract has been unloosed. There's no more terms and conditions on it. So this is basically just a monetary obligation, interest that has been released, or let's say reassigned to your estate. Now, the estate is not a business entity. Estate does not do business in commerce. And this might lend to the reason of why this particular account seems unusable to us. What I mean by that is, do you know anybody who's used it to this date? No. Most people are probably for the first time even looking at this and realizing that it's even there, right? So, but I don't want you to get wrapped up. I hope I made the point clear. I don't want you to get wrapped up in what it was, because if you're trying to say that's just an insurance policy and it was only for this and only for that, you're putting terms and conditions on it where there's no binding agreement or contract to support those terms and conditions. The only evidence that's shown on this instrument is that there has been a release or the removal of a previous claim and an amount of an interest, right? So it's an assignment of property. Now, we'll pause right there and let me go back to my notes here and let's continue following along with my notes. Let's see, we went through certificate, definitions of release. By the way, when I was giving these definitions for things like certificate and release, this is a collection of definitions from Bouvier's Law Dictionary, Black's Law Dictionary, English Oxford Dictionary. Look up these words in authoritative places and I think you're going to still come to the same conclusion, right? So property was leased from our estate and then released to our estate when we completed the service requirements, and there was no further terms and conditions. The obligation of the contract had been unloosed, which is why I say there isn't any terms and conditions. Even though this was designated for coverage, SGLI, it is no longer designated for coverage because there's nobody obligated to perform under the SGLI insurance contract. That's just one position on that amount right there. Also, I would like to mention a point about administration, right? So if we put on our hats as administrators for this estate, because I always talk about the estate that was created when you were born. An estate is a person, just like an individual is a person, a corporation is a person, right? But an estate is I believe the first person that was created when you were born, even before they created the individual that uses the social security number. I refer to them as the individual surety or proprietor. But you have to understand that these things are connected. Your administrative estate, your social security individual arises out of it. They're connected, but in some sense, these are separate entities. And when you were released from active duty or a service member, the government as a custodian, as an administrator for estates, released property to your administrative estate. Most of us don't operate in an administrative capacity. The beginnings of that is us learning these things. We're learning about law, estate, trust law, and all these things. So we're putting on this capacity in this hat. So basically what I'm saying is, to even be able to do what we're talking about doing, we're talking about making a claim from property that's held in our estate. And I am saying, I know everybody doesn't really get this, but I'm trying to explain it right here. This property, the account referenced by box 10 in the SGLI and that amount, that is property held in your administrative estate. That's how I would say that. They released it to your administrative estate, not you as an individual. If they released it to you as an individual, they would have gave it to you in the form of a check or something of the sort. So in order to use this property, when the property was released to the estate, it wasn't taxed because it wasn't being used in commerce. It's just going to the estate. So where it is in the estate, you can't use it. And typically we don't do administration. We operate as individuals in a cash accounting type of thing because no one has ever taught us to operate as administrators. And the system isn't really set up to let you know that there's administrators even operating on your behalf. When you go to prison, they just say bring your birth certificate. They don't technically say that, but they tap into it by your name and your address, and they identify that estate and they tap into it so they can create bonds and different financial instruments and do administration on your estate. It's the same thing, not the same thing, but similar things happen when you become a service member. There's various accounts that's created, various assets that are generated from schools and things that you attend. Many of those things might also be documented on these certificates of release. But these things become assets on books of agencies, governments, administrative organizations, and once again, they are custodians maintaining property, custodianship, and administration on your estate. And again, the certificate of release is an example of the termination of those duties and the reconveyance of the property to your estate. If you had an administrator or of the such, they probably would have been involved in the reconveyance of this property. But generally, we don't. So some of the things that we do is we set up trusts to administer our estates. That's where this line of thinking comes in. But I wanted to bring up this point that we're operating in an administrative capacity. Even when somebody says, bring your DD214 over here to the hospital so we can make a VA claim, you're bringing them these estate records, and they, in a custodianship administrative capacity, starts doing the business of whatever is necessary on your estate. It's the same if you go to jail, same if you join some types of schools, and just trying to make that evident. The reason I'm trying to make that evident is because how are you going to use this property? If this property is usable, you have to do some administration because it's in your estate, which is not a commercial entity. How do you get the property in commerce? In my opinion, you have to subject it to taxes. In order to use the property, you have to tax the property. Usury, tax, just a coincidental location, but I mean not location, just a coincidental, coincidental, I don't know what you call it, but you see what I'm getting at. There's the word usury and then there's taxing. But I'm saying this property hasn't been taxed, it's just been returned to the source or returned to the estate. But before the estate can use it, it has to subject it to taxes. And that's done by a sale, a disbursement, a transfer, or some form of an assignment. There needs to be another assignment to another party so that it can appear as income and it can be subject to taxes and return. I kind of said a mouthful there, but I'm hoping that you're tracking along, because this is overall what this whole study is geared at. How we are going to make a claim and subject that claim to a tax withholding and a return. Basically getting these funds back by doing our 1040 is what we're talking about. All right, so I went through these definitions and I showed you where the account is, right? Did you all catch the account? Did you see the account? The account is, let me read you something from my UCC financing statement. Where's the UCC financing statement? Did I take it out of here? Okay. Well, let me just show you the account. This is the account. We already stated it, right? Definition found in UCC 9102-2 means the right to a payment of a monetary obligation. That's box 10 of Form DD214. The amount is right there. That's the account. So I'm alleging that I have a right to the payment on the monetary obligation because this was released to me. I didn't make a claim on it. I don't physically have the property or didn't physically receive the interest, but it was released to me, so I'm entitled to it. However, that's the account. It's very important. Box 10, account. Right to payment of a monetary obligation. Box 10 is an account. I haven't received the payment, but it's a right to payment of a monetary obligation. So they didn't give me the payment, did they? No, but it's a right to payment. So what still hasn't occurred is the payment. So how do we get the payment is the question, right? The answer to how we get the payment so that you don't get lost is via an assignment of the interest. So they released it to us. We have to do another assignment. And we're going to get into that and demonstrate what that looks like further. But I just wanted to touch on that as we make our way through this lesson. So what is the account? Box 10 is the account. A right to a payment of a monetary obligation. That's what an account is. It's the right to payment. So again, who is obligated to pay on this account? Well, it definitely wouldn't be us because we're the recipient under this certificate of release. This document evidencing that a legal thing has been done, that the release has occurred. I see no other way but to say the obligor would be the United States because it's the Department or it's the Defense Department of the United States or the Department of Defense. And if the Department of Defense or the Department of State or any department has an obligation, that obligation is that of the United States Treasury because that's who maintains the financing of all of them. So I'm making this distinction about who's the obligee in all of these things because how do you get a payment from an account? An account is a right to payment, but how do you get a payment? You have to make a demand on the account. You make a demand on the account by way of a draft. And if you're going to write a draft as a private banker, you have to know who the drawee is, who the obligee is, paid to the order of who. All of that has to make sense in your head. That's why I'm trying to point out who would be the obligee on. I haven't used the term security. I want to be very careful about using that. But if this was it's a security interest, who's the obligee on it? Obviously, it's the leaseor, not the leasee. So it's a right to payment, but in order to receive a payment, the claim has to be made, or demand upon the account has to be made, and an assignment has to occur of the payment. Why do we have to do this assignment of the interest? We have to record the assignment of the payment so that we can document the withholding of the payment. If we properly document the withholding of the payment, it will result in a it will result in a refundable credit when we do our taxes at the end of the year. That is the process that we are slowly getting to and laying out. All right, so we see the account by the definition of UCC 9-102. Who is the obligor on the account? The one who has the duty to pay the monetary obligation on the account is the obligor. Naturally, since the release is issued by the United States government, the monetary obligation would be that of the Treasury Department, making this one of their obligations, which also happens to be entitled to the full faith and credit and not to be discredited or challenged. It's entitled to the full faith and credit, of course, because these DD214s are signed also by an officer of government, and they will authenticate this at the Department of State because it has the full faith and credit, right? It is guaranteed by the United States. They are the guarantor on this obligation, which I again say is an account, which is a monetary obligation, and they are the obligor, the one who's obligated. I covered, I'm just going through my notes here, who is it released to? It's very important to note that this property, by logic and reduction, was released to your estate, right? Because it wasn't given to you in the form of cash, nor was it taxed, nor was it added or treated as income. The IRS talks about publication 551 that if you receive property for your services and you can easily determine the fair market value, that's supposed to be added to your income. Well, obviously you haven't received it yet. You received there was a release of the interest, so you're entitled to it. The way you have to receive it is by claiming it and assigning it, or let's say assigning the beneficial interest. That's what I should have said. That's how you do it. The assignment of the beneficial interest is going to create the taxable event and allow you to receive this payment. We're going to get to all of that. Now, something that I said earlier, I want to go into a little bit further. We know that box 10 is the account. Do you understand that presenting a check for payment is a form of making a claim? Black's Law Dictionary defines a claim as a demand for compensation. So you know a check is a demand for compensation. A draft is a form of a check. But if I give you a certified check for $50,000 and it's written on Bank of America and paid to the order of you, when you take that check to the bank, you are making a demand for compensation on an account. The full contract is all going to be connected up on a check. That's carrying the check is realistically it's a draft, and it's carrying the contract. It's carrying the claim. But the claim is a demand for compensation based on some account. What is the account? Whatever, it was, whatever we agreed to or whatever. But the point that I'm trying to make is when you have an account, which is a right to a payment of a monetary obligation, the way that you get the payment is by a demand for compensation on that account, which would be some type of negotiable instrument, bill of exchange, draft. So I'm laying the stage of why I believe we have to write a private negotiable instrument to make a claim on these funds that have been released to us. UCC 3-104 gives us the definition of a check. A check, so if you don't believe me, look it up. We'll look it up real quick, but I'm just going to tell you real quick. UCC 3-104 gives us the definition of a check. Remember this is important. This is going to come up later. What is a check? Right? I'm asking you right now, what is a check? I want you to think about it. With the limited knowledge that you may have, a lot of us are going to say a check is, I have those. I get them from my bank. You write checks on bank accounts, or you can get a certified check from your bank. But we're thinking in the terms of a private banker. You might not get the checks from your bank. You might write out the check yourself by hand because of the banking instructions that you got to give. A check and a draft at some level is banking instructions. So not all checks have to be given to you by your financial institution. If you're a private banker, you might write out a check based off of bankers' instructions. You hear about bankers' acceptances and A4Vs. A lot of times these are drafts. What makes them drafts is the specific instructions that's given and how they are given to the maker, the drawee, etc.